If you have a side hustle, if you are a gig worker, or if you are a freelancer, every penny and dime counts. I am Carla Dennis, and today I am going to be talking to you about how you can minimize your taxes by maximizing your deductions based on being a freelancer or a gig worker, making sure you understand that you are self-employed and you can take advantage of the business deductions for self-employed individuals. But before we jump in, I'm gonna need you to like, comment, and subscribe because you cannot afford to miss out on any of these wealth building strategies. Now let's get after it. First, you have to make sure you're capturing everyday expenses that you may be taking for granted. For example, the home office is an expense that you can take advantage of whether or not you have a full-time W-2 job. If you are part-time in your business, a fourth of the time in your business, you can still take your home office deduction. And the way that it works, the IRS allows you to take $5 per square feet up to 300 square feet, giving you a deduction of $1,500, or you can take actual expenses based on the total square footage of your home versus the square footage you utilize for your office. But whatever you do, make sure you follow the appropriate ways to do it, making that space exclusive for your business. In addition, do not forget to take the standard mileage rate or to deduct actual expenses of using your car for business. Many of you may be using your car to drive to a W-2 job or doing whatever else you need to do to earn money. But if you are using your car to go out and do things for your business, track your mileage. Make sure that you're taking the standard mileage rate. Currently it's about 65 cents, but recognize it goes up every single year. So always look for the latest standard mileage rate. Regardless, these are expenses, home office, car expenses that you need to be taking because those expenses you're incurring anyway. In addition to home office and car expenses, you're also using your cell phone for business. Most of us have one cell phone and we use it for everything. So take that deduction as well. When you're meeting your clients, make sure you're also taking the deduction for the meal allowance. Remembering it's 50% of the total cost. And if you are traveling more than 50 miles from your home office, you can take a deduction for a meal for yourself. So do not miss out on these everyday expenses that you are currently incurring. When you are working a business, whether it's a side hustle or a freelancer, your income goes up and down. Some months you may be making $5,000, some months 10 grand, some months maybe $1,000. But what's really important is that you pay your estimated taxes. Estimated taxes are required when you're making net profit in a business that is more than $400 per year. This is how so many entrepreneurs who are just starting out get themselves in a tax slinky because they do not understand that they should be paying estimated taxes. Your estimated taxes need to be figured out and projected by a tax professional, and you need to be paying them 4 times a year: April 15th, June 15th, September 15th, and January 15th of the following year. If you can't pay 100%, pay something so that you know you're starting to manage your tax liability. As a business owner, let's talk about balancing multiple streams of income. Multiple streams of income are where you're getting income from your job, you're getting income from your side hustle. Maybe you're getting income from selling stuff online like Amazon. When you have multiple streams of income, it is so important, my friends, that you are tracking that income separately. Every single stream of income needs to have its income tracked separately. Every stream of income needs to have its expenses allocated to it separately. That is so important. And this is one of the things that can prevent you from getting in an audit one of the important items that will help you reduce your tax bill. Whatever you do, do not commingle funds. What does that mean? That means that do not put your business income from one business in the same account as another business. Do not put your W-2 income from your W-2 employer into the same account as your business income. Why do I say that? Because it will get really confusing, and if IRS audits you and cannot figure it out, it could look like your income is being doubled up. So be very careful on how you account for your income from multiple streams. Equally important is to remember that the devil is in the details. Make sure you are keeping very, very detailed records. And one of the things that I recommend is that you keep a copious log, notes on what it is that you're doing. Journal exactly the reason why you went to New York. I went to New York because I had a media run. I ate here with this individual. It's important to write those things down because you will not remember them 3 years from now. And having a copious log is also evidence of an expense when it comes to an IRS audit. So make sure you document. Did I say document? I did. Remember, side hustler, gig workers, freelancers, you are a business owner. It does not matter how much money you're earning, you're classified as a business. Therefore, you are going to be held to the same standard as all the other businesses. But you also get to take the deductions that all the other businesses are able to take. So make certain you remember to get those basic deductions in there, the home office, the cell phone, the car, the meals. Make sure you don't commingle funds. Make sure you document, and make sure you like, comment, and subscribe because you can afford to miss out on any wealth building information.